In the first quarter of 2009, the African Development Bank launched a survey of African financial institutions to understand better the constraints they were facing in trade finance. One of the outcomes of this survey was that although credit was a serious constraint, liquidity was an even greater constraint. As a result of this, the African Development Bank and the International Finance Corporation, the IFC, have agreed to collaborate and to create a platform called the Global Trade Liquidity Program, the GTLP. The GTLP brings together more than a dozen donors and financial institutions such as the African Development Bank to pool approximately $5 billion for global trade. Approximately 30% of this $5 billion will be focused exclusively on Africa, and over the 3-year period that the GTLP is expected to be effective, we're expecting more than $15 billion worth of trade finance to be supported in Africa. The GTLP is just one of a number of different initiatives that the bank is undertaking under its trade finance initiative as part of the crisis response. The GTLP makes great sense for institutions like ours because we're able to leverage the skills and the capacity of existing infrastructure from institutions such as the IFC, who have developed a tremendous experience and capacity in the trade finance sector. One of the rationales for the African Development Bank to partner with the IFC in the GTLP is that by working together, the collective response for the financial crisis can be that much greater. Leveraging the experience of each of the financial institutions that are part of this joint action plan for the crisis response is one of the ways that the African Development Bank can leverage its own resources to have a magnified impact on Africa and assisting them in the financial crisis.
This GTLP will primarily use two structures. We have a risk-sharing structure that I will explain and a direct line of credit structure. The risk-sharing structure is to use international commercial banks network to finance what we call the issuing banks. For instance, if you are an importer, you go to your commercial bank, local commercial bank in a given country, in Africa, for example, and you want to finance your imports. So the issuing bank will call for financing from what we call the utilization bank, and the GTL, because of the lack of liquidity, the GTLP will provide liquidity to this utilization bank on a risk-sharing basis, whereby the GTLP will put 40% of this financing, the utilization bank 60%, and we finance the local bank in Africa that will in turn finance the importer. The direct line of credit structure is quite different, but with the same impact and purpose, whereby the GTLP will provide financing to the utilization bank, and the utilization bank will on lend to the issuing bank for them to have enough liquidity to finance their importer, exporter, and trade operations. So this is about the GTLP. It will, of course, have a tremendous demonstration effect in Africa, whereby the AfDB, World Bank, and other participants will convey a strong message to the local and international actors for them to come back to trade finance.
The Global Trade Liquidity Program is targeting African financial institutions. Originally, the program, as being conceived by the IFC with other partners, is a global pool targeting all emerging regions from all over the world. But our contribution and our proceeds will be targeting mainly Africa. Outcome in this program is that we have managed to convince the other partners and other donors to have an African sub-regional pool. So through the two structures of the Global Trade Liquidity Program, the one on direct loans and the one on the risk sharing, our proceeds will go to financial institutions, which will be targeting SMEs in Africa, small commercial firms. We hope it is demand-driven, but we are confident that they will have a broad coverage throughout Africa. I would like also to add that 30% of the GTLP will be targeting Africa. And as far as the impact and the coverage, we'll have also monitoring, a quarterly monitoring, which will allow us to know exactly where our proceeds went, in which country, and in which region, for which company. So we'll have quite accurate monitoring, ex post monitoring on our proceeds.